You're watching The Open on BNN Bloomberg. I'm John Ehrlichman. We are watching shares of Air Canada. They're under some pressure at this hour, on pace for their worst session of the year after the carrier reported quarterly results. Now, the company does see some reasonable activity on business travel looking ahead in terms of advanced ticket sales. They're seeing some encouraging signs, but their adjusted earnings fell short of what some analysts were looking for. There were some higher maintenance expenses. They are coming off a year where their transatlantic flight business was quite strong, so they say that created some complications year over year. Let's talk a little bit more about the business of Air Canada with someone who's been covering it for a long time. Robert Kokonis is president and managing director of AirTrav. Robert, it's nice to have you with us. What was your takeaway from what Air Canada had to say today?
Yeah, it was a bit of a mixed bag. I mean, I'm tempted to go back almost to 2019 to the pre-pandemic and see where things are at. Air Canada certainly made more money on both the operating and adjusted net income line in that year. But as I said, it's a bit of a mixed bag. Nice to see that demand was up, but seat capacity expanded a bit quicker. So the percentage of seats that Air Canada filled was a little bit lower. But I think what I'm seeing, and certainly a lot of the analysts are seeing, is some concern over cost creep, specifically wages and salaries. Were up 21% for the quarter. Aircraft maintenance was up by 21% as well, somewhat offset by a reduction in fuel prices of about 9%. So, and I might add as well, John, that labor increase quarter over quarter, 21%, and on a unit basis per available seat mile, 9.1%. That's before the impact of any pilot deal, because as you know, the company is still in the midst of negotiating a new deal with a collective bargaining agreement with their pilots.
Yeah, and I guess when you look at, they were saying a lot on the conference call about expectations for all parts of their business with the summer stretch. I think it's fair to say that when we look at some of the U.S. carriers, at least some of them have talked about a continuation of busy activity. What's the balancing act for Air Canada between the fact that there seems to still be some pent-up travel demand going back all the way to the pandemic, but at the same time, maybe people being a little bit more cautious with their cash going forward?
Yeah, I mean, that's a good point. And I think, as you know, we do track yield, which is defined as passenger revenue per revenue passenger mile. So sort of the quality of revenue, and that Q over Q measurement has been trending down quite markedly since the first quarter of last year. Still, last year it was 8.8% up Q over Q, Q2 7.9, 6.8%. Q4 1.8%, and this quarter, first quarter 24, down 1.6%. So does that perhaps underscore some weakening of consumer sentiment, whether it's inflation based or consumer debt based or inflate, whatever it might be? But our consumers starting to hit a bit of a wall. So I think that should be a concern if demand weakens a little bit. I agree with you. The demand is still high, but I mean, I just got back from a trip for several weeks away, and looking at some of the hotel prices, not to mention airfares, and I just booked a flight for next week domestically, and my jaw was hanging open with the prices we're still seeing. So at some point, consumers may hit that wall where they say, we can't afford, for example, to pay $800 to fly one way from Toronto to name the city in Western Canada. So that is a bit of a concern, as are some of those unit cost increases. You did mention a good point about business travel, and that was discussed in the earnings call. Leisure travel has led the recovery for Air Canada and for most other carriers globally, sort of waiting for business travelers to come back. Now, they are creeping on to the transcontinental flights, but some of the short-haul flights, the Toronto-Montreals, the Calgary-Vancouver, still remains somewhat weak. And the carriers need those higher yields from the business markets to offset, and again, back to a possible weakening of consumer sentiment, particularly in the leisure travel segment.
Okay, before I let you go, when it comes to costs, because during earnings season, we talk about how companies are managing their costs, and You alluded to what's going on with some of the labor costs. There's maintenance costs always with an airline. They did talk on their conference call around their technology spending. So every company has to obviously be putting as much capital as they can afford to towards being modern, being ready for, whatever may be coming, including things like cybersecurity threats, et cetera. What's the balancing act for a company like Air Canada? I mean, you track technology spending within the industry. What matters most?
Well, I think as you're alluding to, being up and not down is number one. Every once in a while, there was a famous Southwest meltdown a couple of years ago. It was using a lot of legacy systems, and that is really endemic across the airline sector. The airlines are using systems, green screen X25 systems from years ago. So it's important to make sure those are strong and getting stronger, not to mention putting up all the walls possible from a cybersecurity standpoint. But on that cost basis, you're right. I mean, communications and information technology for Air Canada was up by 27% for the quarter, and on a unit cost basis, up by 14.7%. So Air Canada certainly seems to be applying money towards that very important category, John.
Robert, thank